Uh, so let me start with what is an option. It's a choice. It's a choice given to the buyer. It's a choice given to the buyer. Kindly mute yourself, everyone there. Before we go on to understand what is an option, let me give 2 minutes to what is a derivatives. Derivative is a contract which derives its value from the underlying. So let's say there is a Reliance stock listed in the market. There is a derivative contract which is on the Reliance cash market contract, which is there and listed in the F&O exchange. So the derivatives are listed in the F&O market, future and option market. There's a different segment. F&O segment is a different segment, and cash market is a different segment. So in the F&O market, there are futures and there are options on a given underlying. So for a Reliance contract, cash market contract, there will be a futures contract, there will be an option contract. So derivative is something which derives its value from the underlying market. So there should be a formula for derivatives. There should be a formula for derivatives. So first, let's understand, let's get to know what are the types of derivatives. Futures, options, swaps, warrants. There are many. We are going to concentrate mostly on options, a little bit on futures. In Indian market, futures are available on stock indices, commodities, and currencies. Futures. The futures are available on stocks, stock indices, commodities, and currencies. Options market. The options are available on stocks, stock indices, currency, and gold as far as commodity is concerned. Swaps and warrants are not part of this lecture, and because I don't deal with them, so I don't have any idea about them. Warrants a bit, but not swaps. Our initial objective remains to understand what is a futures contract and what is an option contract, their pricing, and how do they behave. First, the formula for futures contract. I'll take just 5 minutes into futures contract and then I'll jump into option contract. The formula for futures contract is S e to the power RT, where S is spot price, S stands for spot, R stands for rate of interest, and T stands for time to expiry. Spot price is something we have seen, I mean, you have come across in the cash market. Rate of interest is something that Dr. Ujit Patel decides in India. Time to expiry. This is an important concept. Time to expiry. What is a time to expiry? The time to expiry is, let's say there is a 1 month contract. There are 2 months contract. There are 3 months contract. There are 5-year contracts, and there can be a contract which the time of which can be decided by between the two parties. When there is something like this, that is called a forward contract. In futures contract, the time is decided by the exchange. Future and option contract, the time is decided by the exchange. Okay. So currently, if you see, let me take you to nseindia.com and product equity derivatives. So when I talk about time to expiry, when I mention time to expiry, so there will be a time in the future when the contract will cease to exist. There will be a time in the future that the contract will cease to exist. So for, let's say, the current month contract will expire on 28 March 2018. The next month contract will expire on 26 April 2018. The next is 31 May 2018. In Indian market, especially NSE, stock derivatives contract, all the derivatives contract expire on last Thursday of the month. All the derivative contract expire on last Thursday of the month. So typically from 28 March to 26th of April, how much time you have got? How much time you have got between these? Almost a month. This is 1 month. 1 month. So I'm talking about time here. Now I have to give you some understanding about why time is important in our discussion. You have 1 month when you're trading options. Options mostly are liquid in the first month contract. The second and third month contracts are not very liquid. Liquidity is an important part of any trading trading instrument. If the instrument is not liquid, like suppose if there is a Reliance versus there is a Kingfa, a stock. So the difference between Reliance cash market and Kingfa in cash market is the liquidity, the size. Reliance will be very liquid, Kingfa will be very not that liquid in comparison. So in the same sense, when we see the contracts in March, April, and May contracts, the liquidity in the front month is highest, then second, and then the third. So something is important about time, and as far as options are concerned, very important. why time is important. So how much time you get to trade in an option contract, which is for 1 month. An option contract which will expire in 1 month, how much time you are getting? You are getting almost 4 weeks. You are getting 4 weeks, 20 days. The trading hour is from 9:15 to 15:30, which is almost 6 hours 15 minutes daily, which is 375 minutes. This is 375 minutes. 375 minutes into 20. You are getting 7,500 minutes or 125 hours to trade a contract. The life of a contract, at least an option contract, futures can be rolled over, not option contract can be rolled over. The life of an option contract is this: 7,500 minutes or hours in hours. So whatever decision that you have to take to buy, to sell, to trade or not to trade, the sideways or whatever the market is, you have to conclude everything within this time. That is a very important concept. I don't know how deeply that has gone into your mind, because there are different varieties of instrument available in the market. If I compare, let me compare them first with options. In cash market, or there is a you can do a fundamental analysis. You can do technical analysis. And there is derivatives, that is options. How options, if I compare them, how it is different. This is different in terms of time frame. Fundamental analysis, if you do for a company, mostly what we do is prepare for our long-term future. 3 years, 5 years, 10 years, 20 years, whatever it is. Some of us have inherited wealth from our grandfather, and they have accumulated shares of XYZ company, and we have them in physical formats. So that's part of fundamental analysis that you have, and your time is unlimited. With technical analysis, I'm not much of an analyst into technicals, but I can understand it can range from 1 day or intraday to a month or a year, not more than that. Whereas options are concerned, the life of a contract is only 125 hours, which brings a challenge into the trader, that you have to get in, you have to get out, and it has to be done fast without emotions, so that you don't get stuck in the position, because after 125 hours it doesn't exist anymore. कल ऐसे ही बात करते करते एक चीज समझ में आई थी. I mean, in a horror movie, what happens is, किसी ने कोई भूत देखा और वो कहता है वहां पे भूत है, और बगल वाले को बोलता है देखो वहां भूत है, बोलता है कहाँ है. So options are mostly like that, कि अभी प्राइस थी और अभी गायब हो गई. अभी एक ऑप्शन का भाव 20 रुपए था, अभी ये 100 रुपए गया, ये वापस से 20 रुपए हो गया. So the emotions, your emotions will change very quickly in this. So be prepared for this. The reason I'm telling you all this, that you have to prepare your mind for this. If you have come with the mindset that I will buy an option that because I think the market will go up or I think the stock will go up, wait, don't trade options. Because time is a very important ingredient in that. If you don't include your time into your analysis, it's going to be tough trading options. So that is first part of understanding time. Why time is important as far as options are concerned. The psychology that you should have in while you are trading options. I have a story to tell you, which I read from the book called Open. It's the autobiography of Andre Agassi, where he mentions about his training. He's looking for a coach, and he is running 5 miles a day, but he still did not get his coach. This conversation is between him and his would-be coach. Just read it through. Done, everyone? So, if you come to learn this match, you need to learn the tactics of this match. You have to stop. You don't have to run for 5 miles. So, if don't come to trade options with a mindset of fundamental analyst or fundamental guy or a value investing guy, not fundamental, value investing guy. The mindset has to change. You do your value investing at different place. You do your technical analysis at different place. That's okay. You have to compartmentalize in your brain that this is your this account belongs to my option trading and this account belongs to my value investing. This stock belongs to my value investing. I will never sell this stock, at least for next 5 years or 10 years. But I will trade Reliance. There's nothing value. I mean, I don't see value. I'll trade Reliance, or I'll trade Tata Motors, or I'll trade Tata Steel. But XYZ stock, which is not research, which is a mid cap, small cap company, and you think that can become a multi bagger, you keep that in your portfolio, no issues. But will you be able to do a research in HDFC Bank? You need to question yourself. Will you be able to find something unique in HDFC Bank that nobody else knows? If no, then trade it. I mean, then go back to this conversation. I find it apt for every situation. Choose your sport, choose the techniques of the sport, and then play. Play like that. So the technique, in order to understand the technique, you need to understand what is an option, the pricing of it, various technical points like open interest, volume, how do they matter, the data you are going to get from, where is the data. Especially the problem with the option trading comes that you will face at always is the data. With technical analysis and with fundamental analysis, the best part is there is history available. You can see things, you can find patterns, you can see the relationships, and you can think ahead, which is tough in options, at least Indian markets. You don't get data in the format that you want uh, in Indian option market context. So it becomes tough, uh, tougher than the other programs, other way of trading, and which also makes it interesting because the opportunities lies there. If it is tough, if it is not exploited, then opportunities lies there. So let's go back from the basics. Let's go get back to basics from the definition part. What is an option contract? Uh, Types of option contract, definition of call and put, what happens to call and put, what is the premium, what is the contract, everything. Once the basic is complete, I will take you to the places where you can get the data from. One is nseindia.com and the second one is that I use is myfno.com, which we will be discussing. So, and other web platforms which I use for my data analysis, because that is important part. Otherwise, without data, there is nothing we can understand. What is an option contract? It's a type of derivative contract. It's a choice given to the buyer. It's a choice given to the buyer to buy or sell the underlying. Choice to buyer to buy, sell the underlying. If I am the buyer of an option, then I can choose to buy the underlying or not, to sell the underlying or not. Sir, I am the buyer, then how can I choose to sell the options? Let me go step by step and then you will understand why what I'm trying to say. It's a choice given to you to buy or sell the underlying. There are two types of options: call option and put option. The buyer of the call option, the definition I'm saying is from the buyer's point. The call option buyer has right but not the obligation to buy the underlying. Call option buyer has right but not the obligation. Right but not the obligation to buy the underlying. Put option has right but not the obligation to sell the underlying. Right but not the obligation to sell the underlying. Okay, I will take two examples to explain each of them. For call option, I will take the example of a cinema hall ticket. And for put option, I will take the example of an insurance company. There are single theaters. Before PVR, there used to be single theaters. So in your location, there should be a single theater hall, at least till now also. Not everybody has converted to PVR and all. So what happens in the single theater used to happen. So there is a good movie, Amir Khan movie or Shah Rukh Khan movie, and there is a huge rush on the Friday evening, Saturday evening, Sunday evening. So the blackiers used to buy the tickets beforehand, and if you're late, you had to pay extra. ऊपर से देना पड़ता था. 100 रुपए के टिकट को 200 रुपए में खरीदना पड़ता था. So let me explain this in the way of call option. The ticket is the right to enter the cinema hall. The ticket, whoever has the ticket has the right to enter the cinema hall. The blackier purchased the ticket. So blackier, let's suppose he purchased 10 tickets. He has now a right to enter the cinema hall. So now what he does is he sold 5 tickets to someone at double the cost. So he sold 5 tickets to someone at double the cost, and then 4 of his friends come in and ask him for a party. कि चल अब पार्टी दे, अब चल पार्टी दे मेरे को. Your tickets has been sold, and let's suppose there is a party due for him. तो उसको पकड़ लिया, and now they go for a party because he has 4 tickets, 5 tickets left. Now they enjoy the movie. Now what happened in the entire scenario? He sold some of his rights to someone. He had rights in his hands. He sold some of his rights to someone, and rest of the rights he enjoyed. He went to the cinema hall and enjoyed those rights. That is called exercising the rights. So one is called squaring off, the another one is called exercising. When you sell your contract to someone, then that means you are squaring off the contract. And when you enjoy the rights, that means you are exercising the contract. Now, let me define put option. It's a right, but not the obligation to sell a contract. Right, but not the obligation to sell a contract. It's easier to understand call option than put option. Call option understanding is easier to understand. Put option is little tougher. So, pay attention to this. What does an insurance company do? It insures for the protection you are seeking. So I go to insurance company seeking for life insurance. I go to insurance company first seeking for life insurance. So I ask for, just tell me my premium for 1 crore rupees, let's say. So you insure me for 1 crore rupees for, and give me the premium that you want. Quote me the premium. So let's suppose he quote me the premium of 30,000. It's a term insurance, he quotes me 30,000. So I pay him 30,000 rupees. and I get insurance of 1 CR. Now, if something happens to me, I am no more, because there is an accident happened in between while I was going home, and I'm no more. So what will happen? My family will get that 1 CR. Why? Because I bought an insurance. Insurance is a put option. It protects your downside. When you buy insurance, you try to protect your downside. So in this case, what happened? What was my downside? Then nothing happens to me. If nothing happens to me, that 30,000 is gone for the year. That 30,000 is gone for the year. So now, in a put option, if you buy a put option, you sold the contract. You try to, you have the right to sell the contract. If the, let's say you bought a Reliance put option. Let's say you bought a Reliance put option. अगर Reliance गिर जाता नीचे, if Reliance falls down, then you already have a selling position in the Reliance because you bought a put option. Then you are not that worried. You are not worried because you already have a selling position in the contract. I'll take this with examples also. That way you will understand much better. While we discuss the contract specification, we'll understand contract specification and then we'll understand the contract details. Contract specification. For that, let me take the help of nseindia.com. This is nseindia.com. Let me open it for you fresh so that this is the homepage for nseindia.com. In order to search for option contract in the live market, what are the prices running? What we do is go to live markets, option chain, equity derivatives. Live markets, option chain, equity derivatives. You click on that. Now, by default, they open the page for Nifty option, Nifty current month contracts of option contracts. So you see there is a table given. Can you see the table? The table is divided by two columns. One side is call option, another side is put options. These columns are divided by strike price. Divided by strike price. The column on the left side are same as column on the right side. Chart, OI, change in OI, volume, IV, LTP, net change, bid quantity, bid price, ask quantity. And this way also, bid quantity, bid price, ask quantity, net change, LTP, IV, volume, change in OI chart. Okay. So what is a contract? Option contract looks like. This is a 10,000 call option contract. This one is 10,000 call option contract. Let me click on that. 10,000 March call option contract. If This is the detail for 10,000 March call option contract. Okay. So what are the specification in the call option contract and the put option contract? Let's understand. I'm just putting in the LTP, not bid and ask. The LTP, let's say, is 60 rupees. Sorry, 60 rupees. LTP is last traded price. So N stands for NSE. This is this contract is listed for in the exchange of NSE, National Stock Exchange. OPT IDX stands for option index. IDX is index. If it is OPT STK, that is OPT STK. That means stock options. The underlying contract on which the options are there, Nifty, is the underlying contract. If it is stock option, it could be Reliance, ACC, Ambuja, anything. This is the expiry date on which the contract will expire. Once the 28th March comes in, the next day, that is on 29th March, you will start trading in the front month contract, that is April contract. Although that is listed currently also, but the front month contract will become the April month contract. This is called strike price. What is this? Strike price. We'll come to that. This is the option type. Option type means call European. Call European. So what is the other type? Call American. So where can we see the European and the American in America or Europe? No, you can see it here, but not Americans. Call American is not there in any of the listed option contract. It used to be there before 2009, not currently. There are none. Every single option contract in Indian exchanges is European option contract. What is the difference between them? I'll come to that later on. First, let's complete this. This is the premium price. This is the premium price. That 60 rupees is the premium price. The objective of the class remains around that. Objective of the entire class remains around that. This premium price. ये क्या होगा इसका? ये 60 होगा because we are going to trade this price only. 60, 50, 20, 30, 100, 200, 500, 600 क्या scenario होंगे? क्यों? What will happen to this price? The objective remains there. Okay, and that will decide the trading techniques that you can have. There are various trading strategy you have. So let me ask you a question to everyone. If everything is going to be decided on this premium price, what should you be doing for the next 1 month at least, if you want to learn option prices, option trading? What should you be doing? My question is, if everything is decided, your PNL, option trading PNL is decided by this premium prices, nothing else. So what you should be doing for the next 1 month if you want to learn and understand options? Track them as closely as you can. As closely as you can. If you get time, track them. Wherever you are, I'll teach you the techniques to track them. It's not that you can yeah, what happens to that? I'll teach you the techniques to track them. So you find you have that, you go back, uh, uh, once you have those prices in place, you can check back what happened and how will I behave if something happens next time, like this. So let me define this once. What is a strike price? Strike price is the price at which you want to buy the underlying. Strike price is the price at which you want to buy the underlying. Buy or sell the underlying depending on call or put. So अगर मैं, if I am buying 10,000 call option, that means I want to buy Nifty at 10,000 by paying a premium. I want to buy Nifty at 10,000 by paying a premium of rupees 60. Sir, why? The question that comes in, why? Why do you want to buy Nifty, which is running at, let's say, 9980? Why do you want to buy Nifty at 10,000 by paying a premium of 60 rupees while Nifty itself is running at 9980? Or let's say 9500. Nifty is 9500. Why you want to buy Nifty at 10,000 by paying a premium of 60 rupees? If I buy Nifty at 9500, my downside and my upside are both unlimited, kind of unlimited. In case I buy Nifty 10,000 call at 60 rupees, my downside is limited. And if Nifty crosses 10,060 and above, my upside is unlimited. And I'm just paying the premium for the upside. That if there is an upside, I will be party to it. If there is no upside, the premium will be gone. That's all. I'm paying for the probability that the premium, I'm paying for the probability that the Nifty might rise from here and cross this place. Got it? धीरे धीरे, if there's some problem with the understanding, it will come slowly. आ जाएगा, धीरे धीरे करके आ जाएगा. By the time you reach the second or third class, it will come slowly. By the end of the class today, you should be confident. Like this is the introduction class, so beginners, those who are beginners, should be paying a lot of attention to what I'm trying to tell. If you are pro or you have done option trading before and you want the tricks and techniques, then you might find this class a little elementary. But for those who are beginning, this is important. By end of class or by end of the today, you should be confident of knowing that if I buy a call option, I am looking for upside in the market. If I'm buying a put option, I am looking for downside in the market. That if market rises, the call option premium increases. If market falls, the put option premium increases. Sorry. Uh, at some point in the class, let's say right now it is almost 2 o'clock. 2 o'clock. I will open the session for the question and answer, and then I will take every question that you have in your mind. Before that, let me go in my flow. And if you have any questions, kindly keep them. Kindly try to note them down. And for the online participant, you can type that in the chat box also. I'll take all the questions one by one when I open the floor for the questions, so that the recording is very smooth. Because when you're watching the recording, you need to know what the questions are and what the answers were. Okay. So call option rises when the underlying rises, when put option rises when the underlying fall. Okay. कहाँ पे ये डेटा मिलेगा अपने को? Where will we get the data? What are the premium prices? The premium prices are this. That's 60 rupees, 64 rupees. Index option, Nifty, 28 March, call option 10,000. 64 rupees is the price of the premium. Previous close was 154 rupees 90 paise, and it has gone down by 60%. Okay. The open high low close of the premium was 70, 96, 50, 67. Okay. So if you buy low and sell at high, you have doubled your money, and the vice versa. So this is the data as far as the option premium is concerned, and we are constantly going to watch these premium prices and their behavior with respect to the underlying. As far when I am mentioning that you have to track the data, so what is the data that we have to track? क्या क्या डेटा अपने को ट्रैक करना होगा, किस फॉर्मेट में ट्रैक करना होगा? Data will be in the format of EOD, that is end of day. एक होगा end of day data, which you will get from भाव copy from NSE, and MyFNO is already there. Intraday data, your screen presence, how much you are present in terms in front of the screen. Charts in my FNO. There are a couple of other websites like FinIdeas who provides historical data, but they are also not intraday data. So end of day data is your screen presence and charts in my FNO. This is the database that you are going to have. Anyone been to China? Chinese language is tough to learn. I guess you have heard about this at least. This is the Indian perspective, that Chinese, and in fact the perspective around the world, the language is tough in China, tough to learn. And if you take the perspective of Chinese, that because if you don't know the language, you cannot do business there. If you don't know the language, you can't do the business there. If you take the perspective of Chinese people, they say doing business in India is very difficult. The reason is language. In China, you have to learn just one language. In India, every 500 kilometers, you have to learn another language to do business. So, why this point is important? It's the difference between the fundamental or technical part versus options. How Nifty कितने सालों से Nifty has been there for around so many years, and option contracts are there for around so many years. The Nifty is same. The option contracts, all the strike prices are here and there between 5,000 to 15,000. Not much big of a difference, and some price movement. And so understanding of options is like Chinese language. Once you understand this language, you only need this language to do the business. You have to understand this language deeply, and once you know it, just keep on doing the business. There are firms like us, and in the global market parlance, who have billions in dollars in asset under management. They do only option trading, only and only option trading. They do not have a view on the underlying. Fundamental analysis zero, technical analysis is zero, and they trade only and only options. Obviously, it depends on your comfort level. I'm not saying that you should become an option trader. The point is, once you are in the batch, once you are in the class, be 100% in the class and learn every single thing, question every single point that you come across in the option trading, so that once the class is over, you are in a very good position to decide whether you want to continue with the option trading or not, whether you want to do business in China or not. That language is really tough. I cannot understand. Let me go away from China. Let me do business in any other country. But if you really like, the scale is vast. Vast means really vast. And then it's up to you how big you can become. Okay. So while learning, when I'm saying you have to learn, this is important. Your screen presence and your data analysis. This is very, very important. Otherwise, the lectures that I'm going to give you, at least the theoretical gyan that I'm going to give you, it's all taken from the internet. My practical is something that you will love a lot. Otherwise, internet में मैं आपको resources, I'll share the resources. These are the resources I have learned from these places only. It is not the learning that is important. It is the application of learning which is important. These are the resources. At least you should note down. If you, I have learned most of my, and there's one more, optiontradingpedia.com. And if you just have to, Google it. There's enough research material given in these places. My learning has been from these places. You can also have it. In fact, my request would be, by the time we complete we are into the third or fourth session, try to read almost everything in the pages given. Now tracking, since this is at 100, all you are going to get is just 125 hours of data for a month. You need to track it very closely. Otherwise, in fact, as 1 minute is important in this trade. So 125 hours, you decide how many hours you can give in your screen presence as far as screen presence is concerned. Because otherwise, what happens is the prices will move and you will learn the theory, but while you applying, the confidence will not be the same. The one you who will have more screen presence will have more confidence. That's for sure. Screen presence means not being in front of the screen all the time. At least you have recorded the screen and you can watch them afterwards, or at least you are getting the data from somewhere and you can see that data. Work on that data. I'll explain you how I do, and hopefully that something that you will be able to do it. First, let me talk about bhav copy, which you are going to get from NSE, which is which collects today's work. Bhav copy is a collection of today's work in terms of number. What has happened? Collection of today's business that has gone into stock exchange. Okay. You go to nseindia.com, products, equity derivatives, products and equity derivatives. There you see there is a current market report and historical data. You click on the current market reports. There are two daily reports, security in ban period and haircut for approved security. And there is view all data reports. So let me click it. And there is historical data. So if I click it on the daily reports, this is what you get. In the daily reports, you have span file, exposure limit file, span file, first intraday file, second intraday, third intraday, fourth intraday, end of day file. Then haircuts, then security in ban period, bhav copy zip, NSE open interest, combine open interest, bhav copy CSV, client wise position greater than equal to 3%, and a lot of reports are there. You see, many more reports are there. Reports from here to this place, ये end of day span file, ये यहाँ से यहाँ तक की जो reports है, this is for the margin calculation that an exchange provides to the brokers, जो margin लगता है, for the margin calculation. Now what is margin? I'll explain little later कि margin किसको बोलते हैं, but this is for the margin calculation, these files. And you see there are 1, 2, 3, 4, 5, 6 files for this. The margin keeps on, NSE keeps on calculating margin on the live basis and send it to the broker that this is the margin right now, this is the margin right now. If there's a margin shortfall or a drawdown, then you need to pay up. The broker needs to pay up. I'm not going deeper into this because that's not the subject of our discussion. The subject of our discussion is bhav copy CSV. You go to this data and you click on bhav copy CSV. It will show you FO 23 March 2018 bhav copy CSV zip file. So this is FO means future and option. 23rd March, then last bhav copy, the latest bhav copy, 23 March, which is yesterday. Today is not trading day. 2018, and you open this bhav copy. This is the CSV format. FO 23 March. You open this. This is the data you have. This Excel sheet that NSE provides has A to O column. The data, entire data is divided from A to O very nicely in a very nice format. The first column is instrument. The first column is instrument. How many type of instrument? Let us see in FNO segment how many types of instruments are there. That will help us understand what are the instruments, other instruments available. So you can see there FUT IDX, FUT IVX, FUT STK, OPT IDX, OPT STK. Index future, volatility future, stock futures, index option, stock option. These are 5 instruments available. Volatility futures is not very active. The rest of them are active. Symbol. So you have from A to Z all the symbols here. From A to Z, if you click, there are almost 209 stocks. 209 stocks, they keep coming and going, and few indices in the symbol format. Expiry date. From 2018 to 2022, 2022 तक के कॉन्ट्रैक्ट्स है यहाँ पे. 2022. If you want to trade into 2022 contract, you can. There needs to be liquidity. Okay. So currently 2018 में क्या है? मार्च, अप्रैल, मई, जून, सितंबर, दिसंबर. मार्च में क्या है? 27 मार्च का भी कॉन्ट्रैक्ट है और 28 मार्च का भी कॉन्ट्रैक्ट है. We will see. This is the way where you can see how you want to see the contract. कहाँ पे क्या चीज लिस्ट है. If you want to understand the भाव कॉपी. Strike prices. 0, 2.5 strike prices. When it comes to futures, there is no strike price. You see, there is all the point will be always 0. When it comes to option, the strike price has to be there. Option type, either call or put or double X. Double X means it is futures contract. Otherwise, it's an option contract. Open, high, low, close. I guess I don't need to explain this. Open, high, low, close for the day. Settlement price. This is the contracts. Number of contracts traded today, which you can say the volume also. Number of contracts traded today. Remember, this is number of contracts. If you want to find the number of shares, you have to multiply this with the lot size. This is value in lakhs. The total value of business that has gone through in the total transactions that has happened. This is called open interest, and the second one is change in open interest. We will wait for some more time to understand this. And this is timestamp for the day, that it is for the day, for the 23rd of March. We have to analyze this data, find a pattern. Basically, in somebody very genius told me, the stock market is about finding relationships. Relationship between prices, or you call it patterns. Either you call it relationship or you call it patterns. So if you are looking for fundamental analysis and you see this bank has done so well, if this bank does similar things, this will grow very well. In technical analysis, we see the hammer is a good pattern if it comes after a downfall. So if next time it happens, then I will take action on that. It's about understanding pattern. The options are about establishing relationship. This price is this currently with in relationship to the different option prices. What is the relationship of option prices to futures prices or spot market price? What is the relationship of one option prices to another option price? Are they related? So once you find that relationship, you find a pattern there. And once you have a pattern there, you can find opportunities there. In order to understand the relationship, you have to understand the data, previous data. Take the data and use it for yourself. Use it to analyze how this data has behaved in the past, so that I can work with this in the future. Clear? So this is the data we are going to work with. This is end of day data. You get everything in this. I mean, there are 42,567 rows. So that's a lot of data. You need a little more skill. You need a few Excel skills to find something out of this data. Find a pattern or find whatever is needed to you from this data. Now, I will be discussing Excel. How do we infer? How do we extract uh, our objective from this data? Before that, let me go on to another place, which is a paid website, myfno.com, which provides which does all the work for us, or for the lazy people like us, and take the charges. So let me take you to myfno.com. When you first open the website, this is the myfno.com. Okay, I request you to go to the video section and the blog section. Read the blog. Go to videos. Watch the first video at least, the walkthrough one. It's a very good video made by the presenter and the creator of the myfno itself. He is Mr. Anurag Sanwal. He is the creator of myfno. Very good video and a lot of understanding. And there is a blog. The fundas of derivatives trading, and they are important fundas. Works sometimes work and sometimes does not work. So how has this been successfully? How can this be successfully implemented is up to you. आप कैसे इसका risk management करते हैं? How do you trade it? How do you use it? It's going to be up to you. But read it before. This is free. You don't have to pay charges for this, and the blog also you don't have to pay charges for this. Yeah, but if you need data, you need to pay charges for this. I'm not going into pricing. You can go yourself and check the pricing here. Let me log in. I have two logins. One is basic, another is platinum. You will be getting silver one. I have basic and platinum one. So why are you using basic and platinum? Both. When the platform is same, why you both? Actually, we are two people trading at different places. So one is using basic and another is using platinum. So up to you to use it. And if you are a intraday short-term time frame trader, then platinum or a silver or a gold version is good. If you are a end of day trader, then basic is also fine. So let me first take the he is the colleague who's using platinum. Sorry. This is the dashboard. This is the home page. I'm not going to discuss more of this because if you go to that video in the walkthrough video, he has already explained a lot of things. So I'm not going to redo it. Let me focus on where you will get the data and the beauty of how to see them. So I'll directly go to options. The tabs in options are options, put call, chain. And I'm explaining you the broader view, broader things about this entire my FNO. What does it give it to me? What does it give me? This is the table. Yeah. This is the table in which the columns, look at the columns, you have symbol, price percentage change, spot percentage change, volume percentage change, OI change, OI percentage change, IV percentage change, then delta, theta, gamma, vega, then sector, and then time. This is the table. Okay. The time frame you can see, this is 5 minutes, 10 minutes, 15 minutes, 30 minutes, X minutes, daily, weekly, monthly, and days. 1 day, 5 day, 1 month, 6 months, 1 year, 3 year, 5 year. Price, volume, OI, basis is the difference between spot and future. Implied volatility, historical volatility, delivery, put call ratio, rollover cost, VWAP, volume weighted average price, sparks, sector, time, futures, call, option, put, short expiry, current month expiry, next month expiry, far month expiry, long expiries, value, you want to see the value, you want to see the change, or you want to see the percentage change, you want to see in terms of units or lots or shares or value. You want to filter where the OI has greater than 10%, price less than 2%, delivery greater than 100%, and long unwinding, short unwinding, long buildup. You want to sort by price or volume or IV or any of the thing. The layouts, if you want to capture this by image or Excel, any of these, it gives me a lot of freedom to work on the data. Lot of freedom, lot of data already done. I don't need to analyze this. The first thing that once I come to this table, the first thing that I do is I go to show and turn it into lots. Okay, when I'm turning it to lots, remember when you go to NSE provides open interest in shares format, that is 75 means one lot. Okay, so this is one lot, whereas if you look for JP Associate, the one lot will be 15,000. And if I sort only by shares wise, then 15,000 will come at the top and 75 will come at the bottom, but that is one lot for both of them. So for me, the lot is more important than the number of shares. Okay, lot is more important than number of shares. That is one ease of, for this is for ease of doing business, nothing else. Right now what I'm doing is also available in the basic plan, silver plan also. So you don't need to worry that this is only in the platinum one. This is available in the basic also. So it's done in the lot wise. So I can see how many lots OI has, how many OI changes has been done, volume in number of lots first. Second thing that I do is I am interested in XYZ. Let's say I'm interested in Yes Bank, or I'm interested in Bank Nifty Group, or I'm interested in CNX IT Group, or I'm interested in Stocks Group, or I'm interested in Indices Group. So because everything is, you cannot see everything simultaneously, and focus brings in more of clarity. So I go to Stocks Group. For me, Stocks Group are important because indices, in my market watch, indices are something I can scan easily by my eyes itself. But stocks are tough to scan because there are 209 stocks, and let's say every stock has at least 10 option contracts, at least 10 option contract or 5 option contract that are liquid. If I assume that, that brings me 1000 option contract. I cannot scan them manually. So for me, the scanning is important, and this is real time scanning. So I go to stocks group. Now it is only going to give me stocks group. Okay. By default, it will be sorted with volume wise. You can shift. By default, it will be in the it will be sorted with volume wise. So the way I see it currently, that yesterday SBI 240 and 250 call were heavily traded. Can I say that? I can say that they have heavily traded. Although in terms of OI, nothing changed much, at least not much. Okay, I'm not going into OI. OI अभी तक discussion ही नहीं की हमने. Now the beauty of this is you can filter things. Now if I want to see the volume where is greater than 2000 और वॉल्यूम ग्रेटर देन 5000, मेरे को बस वही कॉन्ट्रैक्ट चाहिए जहां पे आज सबसे ज्यादा वॉल्यूम हुआ है. व्हाट आई गेट इज एसबीआई, टाटा स्टील एंड रिलायंस. I mean, I'm talking about these stocks, type of stocks. I mean, 250 is a call option, 240 is a call option, different contract. These are contracts. SBI 250 has a call option, SBI 240 call option, Tata Steel 560, Tata Steel 580, SBI 230 put is another contract. Let me define it this way. Every underlying will have every underlying which is into derivatives will have strike prices in 515 format at least. That could be more than that. 515 means if right now a stock is trading at 100,000, there will be 1000 strike and 5 strike prices below and 5 strike prices above this. If currently the price of underlying is 1000, then there will be 1000 one strike price, then 1020 sorry 980, 960, 940, 920, 900, 1020, 1040, 1060, 1080, 1100. Sorry. So this is the minimum format that the exchange will have strike prices in this format for every underlying which is into derivatives. 515 format. For index, it will be 717. Then 7 strike prices above, 7 strike prices below. The strike prices will be there. And as far as the strike price is concerned, so what is the difference between 1000 and 1040 and 1080? How will you differentiate between them? Because they have the same underlying. If I want to buy 1000 versus 1040, why would I choose 1000 versus 1040 or 1080? Because of the premium. Because of the premium, because of my expectation. Because of the premium and because of my expectation. Let me bring you to nseindia.com. Like currently, Nifty has so many strike prices. At least there can be more. At least was given 515. There can be more than that. From 6700, you have strike prices till 12,900. And for both of them, call option and put option both are listed. They have contracts. If you wish to, you can trade them. But if you wish to trade 13,000 call option contract, you cannot trade because that's not listed. That's not there in the exchange. You cannot trade it. Whatever the price is, but you cannot. If you want to trade 12,900, you can trade it. Now that why would you choose 10,000 or 10,100 or 10,200? You see, the trading happens in these prices. 62.50. This is the LTP, the prices of the option, the prices that we have to, as I mentioned, the premium price. The premium price, which is important for us to track. This is the premium price. Why these prices are different when the underlying is same? What was the definition for the strike price? If you want to, if you are buying 10,000 call option, that means I want to buy the underlying at a cost of 10,000 by paying this premium. If somebody buys 10,100, that means I want to buy Nifty at 10,100 by paying this premium. So at 10,200, I want to buy Nifty at 10,200 by paying this premium. So the farther you go, the less premium you have to pay. सस्ता में खरीदना है. If you want to buy cheaper, you have to pay higher premium. If you want to pay by paying a bigger cost, then you have to pay small as far as premium is concerned. The reverse will happen in the put option. Why put option? If you buy 10,000 put option, that means you want to sell Nifty at 10,000. That means what? You want to sell Nifty at 10,000. So you have to pay 66 rupees premium. You pay 66 rupees premium to sell Nifty at 10,000. If you sell Nifty at 9,900, that is 100 rupees lower, you will pay lesser premium. 100 रुपए नीचे जाके मेरे को अगर बेचने को मिल रहा है, तो I'll pay lesser premium. Getting it? If you sell Nifty at 9,800, which is 200 rupees lower, then you'll pay much lesser premium.
Suppose we compare these two examples, right? At 9450 it is 1.35, but at 9400 it is 2.40.
Illiquidity. It's illiquid. You see, the bid and ask are illiquid. There is difference between bid and ask. This is 1.35 and this is 2.75. So the price difference you can chip in and quote the price at 2 rupees also, and this get traded. So the LTP becomes 2 rupees. So that happens. That can happen. I'll come to the liquidity part once more. Let me complete this one part and then I'll come to the liquidity part. And then I'm getting a couple of questions in the online format also, the volume part. Let me complete this one and then I'll come to the liquidity part. First, get this. If you are buying 9,900 put option, you want to sell Nifty at 9900, right? And you paid a premium of 33 rupees. If you sell Nifty at 9800, then you have to pay a premium of 17 only. So much lesser than that, but you are paying 100 points lower than that. So if Nifty in this expiry comes below 9800, then you then uh, you can exercise your option. Then you can exercise your right that yes, my right can be exercised. But if Nifty remains above 9800, then it will expire worthless. There is no value. Like the insurance contract, if nothing happens to me, it goes worthless. But if Nifty comes to, let's say, 9000, the option contract will rise in value. How much it will rise, I'll come to later. And as far as liquidity part is concerned, let me answer you one. The LTP shown is the last traded price. Okay, there are three prices that you have to take care of. One is bid price, the second is ask price, and the third is last traded price. Okay, bid price is the price that you quote to buy, and offer price, this is ask price, is the quote to sell this option. Let me take you let's understand this from the Reliance. This is a mm, Reliance Industry futures prices, and understand this order book. I'm talking about this order book. This is the buy price, this is the sell price. Somebody is ready to sell at 893 rupees, 11,000 quantity. Somebody is ready to buy 1000 quantity at 892.25 rupees. If you want to buy Reliance right now, either you buy this 893 rupees, or you quote better than this, that is 892.5 or 0.3, 0.4, 0.5, whatever, till 892.95 you can quote 95. If you have to quote it, you have to give your offer. Let's say this is an auction process. Let's say this is an auction process, 892.95. 892.25, 892. This if I have to buy, I will offer. I'll give a quote price of 892.3 rupees. I don't want to buy a market price, which is called limit order. I'll put a limit order of 892.3 and then 892.35 if I don't get the prices till the time of 893. So this is bid and ask. I guess you there is some material in Zerodha which you can read about the order book, limit book, limit order, and market orders. Go through that and you will understand what is I'm talking about. And illiquidity is something I'll address later on when I deal with option contracts. What is why illiquidity and how to deal with it. How to assess liquidity underlying stocks and indices. Somebody has. I'll address that question. Just give me some time. Let me complete this my FNO section. Okay, what is it about? And the filters, the scans that you can do with this. So this is the filter that I can apply. Greater than 10. So where is the highest volume percentage since yesterday? Adani Enterprises 155 call had this kind of rise in volume percentage. So I want to check the OI percentage, where the OI percentage was highest. So this is what can give me in one click. We will be reading about IVs and OI later on, and they will come. This data and this place will come handy while doing our analysis. The next is this put call. In fact, the bar format of this put call provides a lot of insights in terms of OI distribution, how the open interest is distributed in the underlying contract, and how to infer anything out of how to infer your trading position, how best to take trading position with this data once we complete the OI chapter. Why my FNO? Let me be uh, let me be honest and clear about this, that I use this for my analysis, and we are nowhere associated other than the classes. I have never met him at all. But as far as my FNO is concerned, it's one of the few data vendors who has worked very well on the data presentation format, data presentation and data scanning format. One of the few vendors. There are a lot many. There is traderscockpit.com. There are few, I mean, Capital Mind also, but so beautifully presented so that, I mean, as a trader, what you want is ease. Something what Modi ji uh, says, ease of doing business. So if I'm into this business, I want the data in the format that I want, and it helps me to take actions. So this is the help that I will get. So once we deal with open interest, especially there, it will come very much handy for us. कैसे इस डेटा एनालिसिस डेटा सॉर्टिंग इसमें इतना इजीली हो जाता है, be it live or intraday, whatever it is. So these are the two places where you are going to get your data from. One thing I got is the option charts. That's important. Let me click on this. So this is Nifty 28 March 10,000 call option chart for 1 day, where you are also seeing in this lower panel the volume, also seeing the open interest. Okay. Now let's say you have you want to know कि ICICI Bank, और let's say volume सबसे ज़्यादा किसमें होता है. Today SBI call option had a highest volume. Let's see how it behaved. If I click on the chart, 55 पैसे का, इसको हटाते हैं. This is a 580 call chart of Tata Steel. Okay, this is their intraday behavior. If I click on 5-day, this is the 5-day chart, which was from 25 rupees to 4 rupees now. The Tata Steel call option of 580 has come down from 25 rupees to 4 rupees currently. The OI has risen like this, and this is the volume in the contract. And if I put spot price there, if I superimpose a spot price there, then it shows me the way behavior of spot price versus Tata Steel option price. I guess for me it helps. Looking at this data helps rather than just watching the prices blindly. If I get this data in a format like this, it helps. As I mentioned you previously, that you have to understand the relationship between spot price versus option premium, and option premium versus option premium of the same underlying, then this data is helpful. I have not come across any other data vendor who provides something like that. So that is why my preference goes to my and a lot of people who I know. So while we deal with open interest and volatility, we will come back to this data. So these are the two places you can get the data from. Now I'm opening the floor for the question. Till now, if you have any questions, with respect to whatever we have done so far, you can go ahead and ask the question.
So first of all, you said options available on the Indian market are stocks, stock indices, and two others. I just missed that.
Stocks, indices, currency options, and options on gold.
Just gold,
No other commodities.
Okay. And what is the difference between call European, call American?
Call American, call European. Yes, I'll take that. So the first question I'll take is call American versus call European. Next. Any further question?
The strike prices.
Sir, please type in the chat box. Typing in the chat box is very much easier for me so that everybody can see your question. And does technical analysis knowledge required for option trading? Another question, can we technically analyze call and put like we do in stock? How to assess liquidity? Elaborate spot price and strike price. What is volume in options? Are charts available in options? I guess I mentioned that. Any more questions?
So the strike prices, they not all are as in for Nifty, the strike prices move in a gap of 50 points. But for stocks, they move in a different format, and it is different for every stock.
Difference in strike prices decision. Who takes that?
And how is it done? As in, for one stock, it is 10 points or 10 rupees, for other, it's 20 rupees or 20 points.
How relevant these are in a country where people like Nirav surfaces out of every now and then? I guess the last one is not a question, it's a debate topic. Yes, but as far as trading is concerned, I'll share an interesting view on what happened before Nirav. I mean, after the Nirav has surfaced. What has happened so far? How do we decide stop loss technically or something else? Control C. Are there upper circuit and option lower circuit limit? One of the very yes.
For this my FNO, it's just an platform to see the data, or you can. It's like a stockbroking firm also where you can trade it. You can just see the data.
Keep them coming.
So
Keep the questions coming.
The stocks which are open for derivatives as in futures and options. Not all stocks are open for futures and options. how can we know which stocks are open for futures and options? Just by looking at the data.
How copy?
Uh, and how are these stocks selected? As in, how does the exchange or SEBI decide that this stock can have options and futures platform and the others cannot? What is exactly?
What is the difference between selling the call options and buying?
What are the major reasons that the price moves to the strike price? Like if it is trading up right now at 99.50, what is the major reason that it can move to 10,500 or something like that?
Didn't get your question.
Suppose right now the is at 99.50, if tomorrow it becomes 10,500. So what is the reason for the change? Like how do we forecast that it will change when according to the kind of production? To forecast basically.
It's a software like Spider can be used for substitute as a substitute for a Spider or Python.
This is enough. I guess that is enough. Okay, that's good. That's good. And always, मतलब always have questions. जितना ज़्यादा आपके पास questions है. Remember, there are some silly questions also. Okay, and I consider the questions which are silly are something that you have never asked. It was told to me by one of my teachers that if you didn't ask question, that was the silliest question. So ask how a silly question that is, doesn't matter. After all, you have paid for this. Call American versus call European, but I will choose to answer one by one. Easiest the first. Let me read them once again. Call American versus call European. I'll take that. Technical analysis. These two questions come same questions. I mean, and one by one. How to assess liquidity and underlying is important. Elaborate stock price. What is volume in options? Difference in strike prices and who decides that? How relevant is the country on Nirav Modi? How do we decide stop loss technically or something else? Are there any upper circuit limits and lower circuit scenario in premium prices? Important questions. How to select strike prices to trade? Good one. Where do we see the stocks available in the derivatives and their selection by what is the lot size difference between selling call and buying put? How to identify good, better stocks, good, better, best stocks for option trading? How can we forecast the price change? Substitute of MyFNO. First, the easiest one. How can we forecast the price change? I cannot. I don't know. I cannot. I'm bad at that. And forecasting of price change happens with the fundamental analysis or technical analysis, that you think the prices can move to that. Option, it's a very good question. In fact, are we here to forecast the prices? No. We are not here to forecast the prices at all. We are here to trade the prices. That if you have this forecast, how can you best implement this with given the risk scenario? The forecast is yours, trade is mine. Whatever forecast you have, that forecast is yours, trade is mine. Okay. Now, whether determination of strike price should be dependent on patterns and stock price. Nirmal Security has a question. Another question that came in late. What is the lot size? Lot size is a bundle of stocks. Reliance in cash market is one stock. In futures and option market, it's a 500 stocks in one bundle. So you are dealing in wholesale market. You are buying in bundles. So that is the lot size. The Reliance has a 500 lot size. XYZ, JP Associate has a 15,000 lot size. Nifty has a 75 lot size. So lot size is defined by the exchange. This will be the lot size. SEBI has given the mandate that minimum lot size should be around 5 lakh. If the lot size is not 5 lakh, it should be changed in a month or two. So every now and then SEBI exchange keeps on changing the lot size. So that is what the lot size is. Okay. So this question is done. Where do we see the stocks available in derivatives and their selection process? You see the stocks available in derivatives in the Bhav copy. You can see there are 209 stocks. Let me open the Bhav copy for you, and let me filter this for you. You go to symbols and you check all the symbols here. The symbols are there. The symbols that you need, you type in the name. Let's say GSFC. That's there. Let's say Shobha Developers. SO Shobha Developer नहीं है. तो Shobha Developer नहीं है and GSFC है. So that's how you decide which is there. Now who decides that? The exchange decides that. Exchange has a format that exchange XYZ stocks will come in, XYZ stock will not come in, and exchange give notification before bringing in an stock and getting it out from the FNO stock. Exchange gives notification. And where will you find notification? Obviously, you have to go to exchange notification in the NSE and find this. Otherwise, be on Twitter, follow few people, and you will get the notification itself. You don't need to roam around. I mean, there are it's work of some of the journalists. The journalist will provide you, like the CNBC TV guy, the Bloomberg TV guy. These are the people. They will announce it from the roof that this has happened in NSE. So just follow them and you will get it. Okay, and that remains our purpose. Let's say Fortis is going out of the ban from 1st of April. So that's been announced by the exchange and it's given. So that's the easier way. Okay, so that question is done. Difference in strike prices and their decision. Same answer. Exchange does it. Exchange can change it. Like last month DLF has strike price difference of 5 rupees. This month it has 10 rupees. Last month Vedanta had strike price difference of 20 rupees, 10 rupees. This month it has strike difference of 10 rupees. Generally, when a stock goes, generally the strike prices are even strike. Even I mean to say 205, 210, to 960, 980 इस तरह करेगा. You will not get the strike prices of 654.5 rupees generally, but you will get it once the stock goes into any corporate action change. Like a few days back, Tata Steel had a right issue. Few days back, Tata Steel had a right issue. So if you check for Tata Steel, like okay, how will you check for Tata Steel? You go in there, option chain, live market equity derivatives option chain. This is the default page you get. You either select for Nifty or Bank Nifty or indices from indices, or you type the name of the stock. You type the name of Tata Steel and you will get the strike prices. You see in the strike prices you have 565.45, 584.30. This is due to a corporate action change which has happened few days back. There was a right issue, that's why you are getting these strike prices like this. You will not get it after let's say couple of expiry later. So that's done.
So the when they change the strike prices, suppose I had a call option at 2375 of some random stock. Now they have changed, they've removed 2375 and they've straight up gone to 2380. And I had it for say 3 months. I had the option with me for 3 months. So how can they change in between? And if they change in between, what will be my new strike price?
It's a good question. Let me first repeat the question. Let's suppose a stock goes in the bonus. स्टॉक में बोनस अनाउंस हुआ एंड 1:1 का बोनस है, 1000 रुपीज स्टॉक का प्राइस चल रहा है. आई बॉट अ कॉल ऑप्शन ऑफ 1100 का 3 months later, that is March is current right now. March is the month. April, May, I bought it for 1100 May contract. Okay, now the exchange, the company announced the bonus. Now the 2 days later is the bonus X date. The exchange will give you notification that the not notification, the stock price will half and strike price will change. In fact, the strike price will become half and your lot size will become double. So let's say you bought at 1100, your strike price will become 550 and your lot size, let's say that was 1000, that will become 2000. So you remain with the same position.
That is okay in case of bonus, but like just you give the example.
Strike price.
Where the strike price changed from 10 to 20 or 20 to 10, the difference. As in 2420 and 2420 and 2440 were two strike prices. Now they've introduced a new strike price. No, suppose they've removed 2440 and they made it straight to 2420, then 2460. The difference has become of 40 points instead of 20 points. Then my call was for a strike price of 2440. That is my call. Go.
The question is, let's suppose you have a strike price is Tata Steel May, you have a strike price of let's say 584.30. You bought this call in the in this contract in February itself. Okay, and whatever exchange removes it.
Yes.
First, if there is an open interest in the contract, exchange cannot remove it. Exchange will not remove it. It will remain. Exchange, there are 3 months contract. So right now there is March contract, there is April contract, there is May contract. Okay. So let's suppose Tata Steel May also has 584.30 ka contract. So that will remain till May. But from June onwards, which will be introduced after on 29th of March, the June contract will be introduced on 29th of March. They will not introduce 584.3 contract. So it was not there, it will not be there. So that's how it goes. Now let me take these two questions, very important questions, and doesn't have a answer in yes, black and white. Is technical analysis knowledge? Technically analyze put and call, do we stock? The first question, technical analysis knowledge is required for option trading. Every knowledge is helpful. That's my understanding. Every knowledge is helpful. I am taking knowledge for every field, especially fundamental, technical, and other fields also. So it helps, no doubt. I won't say it doesn't help. To me, it helps. But is it necessary? I would say no. It's not necessary because I'm not a good technical analyst. I am yet learning fundamental and technicals both. And I've been in this business for last 8 to 10 years. So I can say confidently that it's not necessary, but it helps. How? It all depends. Yeah, how do you want to need, do you if you're good at it, why not take the help of it? The second question is, can we, these two are both different questions, can we technically analyze call and put stock, call and put like we do in stock? To answer this question, i would uh, I would say, just think about a stock's history versus an option history. Option has a history of 7500 minutes, not more than that. But stock has a lot of history. Stock has a lot of history. So it is easier for a technical analyst to change the time frame, track the stock, make his decisions based on what his understanding is of the stock. मैंने एक घंटे का टाइम फ्रेम लगाया, एक मिनट का टाइम फ्रेम लगाया, and I check the stock. But for 7500 minutes, that is, you have got 20 days. तो डेली टाइम फ्रेम में चार्ट तो आप देख ही नहीं सकते. You can, the chart will be completed from day 1 to day 20. The chart was born on day 1 and it will be completed by day 20. So you don't have much of a history. So you need to break that in minutes so that you get at least 7500 candles, so that you can analyze something after looking at the history. I would say, if at all you want to see the charts of option to analyze stock, call and put, you can at max watch Nifty option chart, not stock options. Stock option के chart को देख के trade करना, I have not done it. I would not say you do it. Nifty, I have seen some of the people doing it. So, I don't know if their method is robust or not, what is needed there, but there are better ways. Somebody say, but we get continuous data charts for to futures and option too. Where do you get option charts continuous data for more than 20 days? Rolling, I mean, an option is dead on 28th of March, cannot be rolled over for 29th of. Futures can be rolled over. I'm not talking about futures. The question is technically analyze call and put like we do in stock. So that is my answer to the question. If at all I will be doing it, I will be doing in the ATM Nifty options, nothing beyond. ATM Nifty options, nothing beyond. If at all, I don't need it. I don't do it. How to assess liquidity? What is volume in options? Volume in options is like volume in any other contract. Options are different contracts. For an underlying, every contract is different. If you look in terms of contract, every contract has a different price, every contract has a different volume, every contract has a different identity, different ISIN number. So SPI 240 call and 250 call in the eyes of an exchange are two different contracts. So the volumes are going to be different, and you will get the data of volume. Volume is number of shares traded. Number of shares traded. Okay. How we decide stop loss technically or something else? It's a very broad question. Once we decide on strategy, once we look for strategy, once we start trade discussions, then we will address this question. Not right now. It's not the good. It's not the right of timing right now. In fact, there are a couple of questions which are not, which I will take later on. Like I will try later. How to select strike prices to trade later. Once the discussion to trade starts, we will take this up. This is a unique question and a very important question. I guess not many of you come across this problem before. Uh, are there any upper circuit or lower circuit scenario in option premium prices? Yes, there are. Yes, there are. What is the upper circuit and the lower circuit premium price scenario? Exchange, and it's a unique problem that exchange has also not find a good solution for. It's a unique kind of situation that exchange is into. The methodology for I hope everyone knows upper circuit and lower circuit. If you don't know, look into the charts of Nifty 18th May 2009. You'll find upper circuit there. And go back the last few, I mean, the 21st Feb, 21st Jan 2008, you'll find lower circuit there. Okay, so what is upper circuit and what is lower circuit? You will get it. Now, in case of option premium price, are there upper circuits and lower circuits? Yes, exchange has upper circuit and lower circuit for every contract. Rather than option, for every contract they have. For a contract which is an FNO, the lower and upper circuit can be removed intraday. That is, they can be open for trading intraday also. So, a stock which is into cash segment versus a stock which is into FNO segment, a stock cash FNO segment once hit the upper circuit may or may not open. In fact, it doesn't open. But if you hit upper and lower circuit in the FNO segment, it opens. After a while, it has to, there will be circuit and circuit will be opened by the exchange. So the same case will happen in the option segment also. Most of the time, what we face is, let's suppose I bought a 24,000 put 24,000 put option in the Bank Nifty, and there is a crash. Let's say I bought 23,000 Bank Nifty put option, and there is a crash in the Bank Nifty option tomorrow. Let's suppose happens, possible, and there is a circuit. There is a circuit. I want to get out of the contract, but I cannot get out of the contract, and exchange takes time to open that circuit. Small time. I wouldn't say it takes 2 hours, but small time. So that becomes a problem for an option buyer and option seller. जिसका short किया हुआ है, उसकी हालत खराब करी है, उसको वो काट नहीं पा रहा है. जिसने long किया हुआ है, अगर if it recovers back, he loses the premium, at least a bit of it. So a circuit creates a problem in the continuous movement of prices. So this is a solution that we as a trader are also waiting for. We have not come across any exchange and us both. There is no solution as such in sight which does it regularly. We have tried a lot of solutions. The one solution that exchange currently is working in is there has to be one lot trade before it opens the circuit, but that one lot is big enough. Let me tell you one practical scenario which I came across. What happened with me on the 25th or 26th of October, when the last October, when Jaitley ji announced that bank recapitalization package. Every stock was on upper circuit, every bank stocks. One stock, I guess, ICICI Bank. ICICI Bank was trading, had a gap up of around 292 के आसपास उसका gap था, and the 280 call had a circuit. The first circuit, it was on the circuit at 3 rupees first. This is this I'm telling you from my memory. This is not I'm telling you from actual prices. मेरे को जितना याद, because I was there, I was trading this. The first circuit was 3 rupees. The next circuit was 5 rupees. The next circuit was 6.5 rupees, and then 8, and then it went to 15 rupees. So if a stock is trading at 292, then 280 a call at 3 rupees is a. If you get it at 3 rupees, it's a, you are doing an arbitrage. I mean, you are getting it 9 rupees less. आपको ये 9 रुपए का फ्री का मिल रहा है, इसका भाव होना चाहिए एटलीस्ट 12 रुपीज. इट शुड एटलीस्ट कॉस्ट 12 रुपीज. द सर्किट प्राइस इज 3 रुपीज. द सेकेंड सर्किट इज 5, then next is 6.5, then 8, then 15. It happened in a time frame of not more than 2 minutes, 2 to 5 minutes, not more than 2 to 5 minutes, but that was enough. At this price, 3, 5, 6.5, 8 and 15, at least till 8 options were traded. So those who got it, they made some money. Those who sold it, I mean, I don't know their position, but obviously in these kind of scenario, like bank recapitalization, you will get abrupt prices. Which I mean, this option was on the previous day was quoting at, I guess, 10 पैसे. तो 10 पैसे से 3 रुपए का सर्किट भी बहुत बड़ा सर्किट है. So that is why this is a challenge to exchange as well as us as a trader. You will understand the complexity of this once you face a circuit. जिस दिन आपको आपका एक कॉन्ट्रैक्ट कहीं पे भी सर्किट में फंसता है, उस दिन आपको इसका कॉम्प्लेक्सिटी समझ में आता है कि व्हाई दिस 2 minute is very important. Okay, thanks for asking this question. Difference between selling call and buying put. This is the I'll take up this in the just after this. अभी इसके बाद यही क्वेश्चन लूंगा मैं. While defining, while speaking about the formula of call option pricing and put option pricing, we will discuss difference between buying and selling. Elaborate spot price and strike prices once more. Okay, spot price is the price that you get from the cash market prices or FNO का जो futures का price है, that is taken from the spot price. Spot price is that price, and strike price is given by the exchange. Exchange decides the strike prices, and at those strike prices you can buy or sell options, call and put. The premium will be decided by the market, like the premium, like the futures price or the spot market price is decided in the market. The premium is decided by the market. How to assess liquidity, stocks and indices, and how to identify good, better stocks for option trading. ये दोनों क्वेश्चन सिमिलर ये हैं and important है. For every or any market to function or any instrument to work, what you need is liquidity. If liquidity is not there, the trading cannot happen and the prices are not important. To give you an example from our real life, like there are two complexes, housing complexes. One which is not yet built, I mean which is just built, and everything is there are a lot of empty houses, and one complex which is very old, not very old, 3-4 years old. Only 1 or 2 houses are left to sell. Rather than most of them are occupied. In both the housing complex, the pricing can differ a lot. The liquidity in the first one is huge. The liquidity in the second one is not very good. So the comparison of the price, if you have to see, if you have to take the prices as a barometer, you will never go to the second choice to take the price as a barometer for the entire sector, entire region. If you have to take the price, you take the liquid one. You don't take the illiquid ones. The illiquid one will have a random prices. You can quote any prices and you may get a buyer or seller for that prices too. But for the liquid ones, there will be a lot of choices, a lot of competition there. So that is why, dealing there will be fair. Dealing there will be fair. By fair I mean you will get a good price. Fair. So that's what it is into option market, or for that matter any other markets. Liquidity is important, and you can get into a contract, but if you cannot get out of the contract, the contract doesn't the trading doesn't matter. Trading is not a good game there. So how will you assess the liquidity? Assessing of liquidity, there are snap.capitalmind.in. This is another good website which captures the data in a nice way. They also provide something similar to MyFNO, but I still like MyFNO. The two sections that I like the most, at least as far as FNO's part is concerned, one is chart. There is FNO chart, and another is this one, PCR, change in OI, standard deviation, liquidity, IV table. This is good one. So I click on liquidity. Okay. And it's written there, hover your mouse over the pointer of the stock symbol and see the average traded value. This is average traded value per day. Okay. So who is liquid and who is not so liquid? As far as options are, options में अगर जाना है आपको, so let's say you want to see the liquidity. Liquidity comes from the volume traded. So you create a benchmark that I need. One is there are two types. That there's two data that you need to find in when you're talking about liquidity. One is volume and another is open interest. I'll just concentrate on volume first. Open interest will come later. So you see the volume, let's say where the volume is greater than 500. You will see names there. Just click on the symbols. You clicked on the symbols and it's sorted symbol wise. Now you see stocks where stock options where volume traded for the day is more than 500 lots. Okay. And Adani Enterprises, how many contracts are there? 1, 2, 3, 4, 5 contracts. Adani Port, only one. Ashok Leyland, 1, 2, 3, 4, 5, 6, 7, 8, 9. So can I say Ashok Leyland is more liquid than Adani Ports? Can I say that? Intuitively लग रहा है ना? So who is liquid, who is not liquid? Just keep on scrolling and you will find like there is Bank Baroda, okay, but there is no Bank India. There is Axis Bank, there is no Andhra Bank. Andhra Bank is into FNO, but that is not there. So it is your filters that is going to make it important. I could not follow. Okay, liquidity. We are trying to guess the liquidity. Liquidity in a contract. It is for the day. This table is for the day. What I'm talking about is volume and open interest tells you the liquidity. The greater the volume, the greater the open interest, the greater the liquid is the option, the underlying is. What I did was filter stocks with volume greater than 500. You can do it greater than 1000 also. The purpose remains who comes in more often, which underlying comes in more often. So that will be my benchmark for liquid option contracts. So you will not find Andhra Bank, but you will find Axis Bank. You will not find Bank India, but you will find Bank Baroda. You will not find CESC, but you will find Can Bank. You will not find you will not find IGL, I guess. Yeah, you will not find IGL, but you'll find ICICI Bank. So the quant way of finding the liquidity is this. Is there any ideal volume and OI to trade in a particular stock? 500, more than 500 lots in more than 5 strike continuous strike price, 5 to 7 strike prices is fairly liquid. More than 500 lots on a daily basis, it has to happen. It's not that one day it happened and if you ask me the generic names, you know, most of the large caps and evergreen names are the liquid ones. Large cap, evergreen names. Most of the banks will be liquid. Private, large PSU and private bank will be liquid. Most of the large IT will be liquid. Most of the large pharma will be liquid. Everything which is large, at least, will be liquid.
That time you determined liquidity by seeing the bid ask price. You were saying something about the liquidity.
Is not there.
Yes.
Yes, liquidity. Let me. I mentioned one thing while in the class that at 93, 94.50 the liquidity is not there. Let's see the volume traded. At 94.50 the volume traded is 2850 versus this versus this. In fact, there is a pattern of liquidity if you see the Nifty strike prices. Every strike price which is into 50, 95.50, 96.50, 97.50, 98.50 is less liquid than the previous one. You understand the reason why? Because I will be the market is more comfortable in 9900 and 9800 rather than 9850, and it's a pattern which you cannot impose on the traders or market. It's a pattern which is a market doesn't want to change. It was introduced. It was not there before. It was introduced later. So market doesn't want to change its behavior. So that is how it is.
So you saw the volume and then you said that there is no liquidity. You did not say bid ask and.
No, I saw the bit. I mean, I know it intuitively that it will not be liquid, and that is why you get the this kind of prices. Any more questions left?
Is it because the difference between bid ask is more as compared to other bid asks?
The market is not willing to trade there, so the bid ask will be high.
The difference between bid ask is high.
Will be high. Now substitute of my FNO, it will keep on coming while we are deciding. As far as Spider and Falcon are concerned, no, they are not substitute. They are different. They are for different purposes, and it gives you something different. They are not substitute. It will keep on coming as we go on. We'll see whether determination of strike price should be dependent on patterns of stock or patterns of movement of premium. Good question, and will come handy when we decide. धीरे धीरे अपने जब करेंगे तब अपने आप ये this question will be a process. It's a process when we determine this. How relevant are call American versus European? First, let me handle this. Call American versus European. None of Indian contracts are European. Everything is American. Everything is European. One, and everything is cash settled. None are uh, delivery settlement. European versus American. In American contract, you can exercise the contract the time you want it. You can exercise the contract the time you want it. In European contract, the exercise can happen only on the date of expiry. To give you an example, right now, Nifty 10,000 right now Nifty is, let's say, 9,000 or 10,000, let's say. अभी 10,000 पे निफ्टी चल रहा है. Okay, what should be the price of 11,000 put option? Those who have a bit of understanding without knowing the prices, अगर आपको pricing मालूम नहीं है तो you can choose to ignore the question. But if you have the idea, what should be the price of 11,000 put option? At least 1,000. At least 1,000 होना चाहिए. If I change the expiry to December 2022, which is a contract that is there, December 22 का contract है, will the pricing remain same? Why? At least, forget about illiquidity. What is the at least prices? At least price. At least 1,000 होना चाहिए. Let me take you there. Let me take you to December 2018 का price. What is the price of 11,000 put option? How much? 870. At least 873 में you can buy. At least there is a bid and ask and there is LTP. 873 is the bid and ask. So you mentioned if Nifty right now, this is 11,000 put, the price is 873, and right now Nifty is below 10,000 or at 10,000. So why the prices are below this, below 1,000 rupees? Time value will be added or deducted. This is 2018 December. I'm not gone farther. But अगर मैं थोड़ा और दूर जाऊंगा तो ये और कम हो जाएगा.
अभी खरीद के एक्सरसाइज कर सकते.
Someone said I can buy and exercise this. That's the answer, that you cannot exercise this. Because it is December 2018. This is a European contract and you cannot exercise this. Had this been American contract, the prices would have been 1,000. Got the drill? Why American versus European? Because you cannot exercise this contract. One, and second, another thing is Nifty currently is 10,000. But if you take the monthly premium of Nifty, right now there are 9 months left. Let's say 40 rupees as a premium of to Nifty. So 9 months into 40 rupees is 360 rupees. So Nifty for the December month is trading at 10,360 rupees. And then the premium of this option will be decided. But still, you cannot quote, this quote can be lower than 1,000 only because this is a European contract, not an American contract. Had this been American, this would have been 1,000 rupees. minimum. Done. Now let's come to Nirav Modi. How relevant are in a country where people like Nirav Modi surface out of every now and then? I can have a patriotic answer. I can have a different answer to this as far as market answer. But let me give you a very good analysis, and not analysis, but observation of mine. The most affected counter with the Nirav Modi saga was PNB. After the date of announcement, after 3 or 4 days to after announcement, if you sold call and put premium of PNB, you would have made a good profit. I'm asking you to sell options. You would have made a lot of profits. Selling options after the saga has happened after 3-4 days, not talking about it on the same day, after 3-4 days, if you sold, because though it is tough to sell. Another question came in. But can we sell and buy instantly, right? To buy only exercise on the date of expiry? Yeah, you can do. I mean, you can buy, sell anything. You don't have to wait for the expiry or uh, uh, that to exercise. Buying and selling can happen, and that keeps on happening. You don't have to worry about the exercising or expiry date. PNB. आई गेस जब भी ये आया होगा, आई गेस इसके बाद ही आया होगा, फिर के बाद ये यहाँ पे जो अनाउंसमेंट हुई होगी, द प्राइसेस हैव नॉट मूव्ड मच. इट्स मतलब ये दिस वाज द नीरव मोदी डे and this happened on the next day, and after that it has not crossed this price, this high price and this low price. It has remained in between. So there's much talk, but the trade is different.
I remember my father-in-law buying PNB after Nirav Modi case का announcement at 127 rupees. तो उसके बाद पहले announce हो गया.
पहले
हाँ. Gap जो है वो इसका केस के बाद ही है शायद. Announcement के बाद.
ये वाला ना,
हाँ.
उसके बाद की वो जो बाकी सारे जो केसेस आ रहे थे, तो ये 500 करोड़ वाला जो केस आया था वो ये गैप डाउन था. नीरव मोदी फेब के बाद दिस इज द फेब, ये फेब मैं एक्सपायरी वाइज देख रहा था, दैट इज 22 ऑफ एक्सपायरी. ये 22 को एक्सपायर किया एंड उसके 3 दिन बाद एक अनाउंसमेंट फिर से आई थी कि 900 करोड़ का एक और कोई इस तरह का हुआ, एंड दैट मेड अ गैप डाउन. This gap down, which was into March, when why I in the March contract, मैं March contract में अगर फोकस करता, Feb में वो चीज हुई थी. Feb contract was very volatile, and March contract में the same thing was not at all volatile. It happened in the March contract. मतलब March contract में जो सागा हुआ, how things become different in a month, so that's there. Let's take a break. चाहिए? हाँ. And let's come back at before 4 o'clock, 3:50. This is 3:42 right now. 4 o'clock. 4 o'clock is good, and उसके बाद it will be 30-minute exercise, and then we will be done for the day. Yeah, let's continue करें. Break or continue? So this is a 15-minute break, and then we'll continue at come at 4 o'clock sharp. This will be open like this only, and in the recording you will get the blank for 15 minutes at 3:45. ठीक है? Yeah, this is a break, and 15 minutes break is there. Come at 4 o'clock. What's the difference?
मैंने कुछ नहीं खाया है, खाली डाब का पानी पिए थे, अभी थोड़ा कुछ खा ले रहे। आपके पास इसमें 5 है, हाँ बोले 15 मिनट को भी ब्रेक दिए, उसके बाद वापस शुरू। अरे वापस चम्मच नहीं पी पाई, सब मैंने चम्मच दिया बना तो ऐसे हमारे घर में यहाँ पे निकलेंगे नहीं, अब बोल रहे कि 4 बजे का ब्रेक के बाद आधा घंटा और ना तो सब छोड़ देंगे। हाँ तो डॉक्टर को बोल रहे ओके नहीं आएगा डॉक्टर लंच करके निकलते ना तो so can you just answer the question I was the data and completed NSE and chart that is there. I'm ready to understand properly.
That's it. Okay.
कोई दिक्कत नहीं है।
Thank you.
Bye. I'm not sure. Okay.
Yes. वापस क्वेश्चन बोलिए.
So NSE में आप मुझे चार्ट डिवाइस पे लिख के दिखाएंगे ना? हाँ ये बात इससे तो प्रॉपर्टी और जो पहले एक्सप्लेन करते थे क्या चीजें समझ नहीं आ रही
Charts. इसमें chart की this data.
yeah this data actually
Okay. You don't focus on data till here, till net change. I mean this IV from IV to this data. Don't focus on these columns. Neha Sahuji has a question. What is your outlook on 540 call on March expiry of Axis Bank? Okay, those who are still there on the online, you can ask question still, and we can choose to do one more thing. Something we didn't do at the start of the class. Introduce yourself, which I'll try now. Thank you. For every online student, you ये आदत नहीं
तो नहीं बताए
ये खाने की आदत नहीं है. What is my outlook on 540 Axis month expiry call? Let me take it. So there is a question. I guess name is not necessary. So I see a lot of people are having a good experience, and swing and intraday trading is something that the experience is about currently. So that's good. That's good. Mm. As far as the opinion on the individual queries of Tata Motors put and Axis Bank is concerned, we will see both the things, and just in a while. Until then, let's see.
So which time frame is best to trade for in options and futures? Intraday swing.
Don't keep the trade. There are long trades, there are short trades. Don't keep the long trades more than 7 days. Don't keep the short trades more than.
So there is something like the first 15 days you should buy a contract option or put, and last 15 days you should try to sell a put or
Not necessarily. Not necessarily. There are two school of thoughts. There is one school which doesn't want to buy option at all. They are option sellers always. And there's one school of thought which trades using their directional model. So in options, you can do two types of things. One is trade with direction and non-directional trades. So non-directional trades are a little uh, are something we should are something where option understanding is very necessary. Option premium understanding is necessary. A directional trade, you need to back it up with your own technical indicators, technical analysis, rather than options. So because option doesn't give you direction, option gives you trade execution rather than trade ideas.
sell. And if I have a bullish view on a stock, I should trade in cash or in future. Which parameter decides this?
Cash or future, your capital decides this. Your stop loss decides this. Stop loss amount decides this. So I see there are few traders and there are few newcomers also. So it's a mix of those. So for those who are experienced, those who have traded and experienced, please ask the queries in the group so that it helps people, it helps the newcomers a lot. What are the kind of queries uh, to look for? Where should we look for? So if you are in the group and you are asking in the WhatsApp group, you can ask at any time. The answer can come at my convenience. It will come, no doubt about it. So ask in the group, and there is a larger group also, wherein after the class, once we end the session, you will be into the larger group. So you will be part of that group and you can have discussions there about. And as far as offline versus online is concerned, the offline segment, those who are in Calcutta and those who visit Calcutta, we have recently introduced a monthly meet for our past students. Due to limitations of physically present everywhere, we cannot do it for the outside guys. So if you're in Calcutta, we do it every third Saturday of the month. Every third Saturday of the month. So this month in April, this will be 21st of April. So that day, the classes, the general classes will not be there. So the monthly meet is there. And another thing is, which I wanted to ask once let's let everybody come in, then I'll ask that. Are you guys comfortable in Good Friday class on Good Friday? Because one session is going to be, because we have a holiday on Thursday and Friday. We have holiday on Thursday and Friday. Market is not working. So are you comfortable in coming uh, Good Friday to take the class?
So instead of Saturday, the class will be on Friday.
No, the one of the session that I guess 7th of April, the session will not be there. So that I am preponing. The schedule will be similar. So Good Friday, this Friday, I'm thinking of doing a class. Hello, is my voice reachable to everyone? Okay, thanks. Yeah, this is the question that I've asked. One is kindly introduce yourself, which we didn't do at the start of the class. So at least get introduced now. Uh, uh, and are you comfortable in taking a class on this Friday, which is coming Friday, which is Good Friday? I guess everybody has a holiday. So Thursday, market has a holiday on Thursday and Friday both. So I thought it's good to have it on Friday.
So timing क्या हुआ Friday?
We'll tell you tomorrow. चलो let's start. ठीक है. where were we? Okay. Uh, now let's get back our focus on premiums. Okay, and uh, understand call option and put option. Okay. First, the broader definition, the broader not definition but the thumb rule types of thing which we have listened to before coming the class. And if market rises, if the underlying rises, call option increases. If the underlying fall, put option increases. Okay, itna tak is something that you have inculcated and you know about it, I guess. Now what is the call option? How do we get the call option premium? कैसे मिलता है call option का premium? First, what is the premium made of? The premium is made of intrinsic value plus time value uh, option premium is made of intrinsic value and time value. There is a star mark. What is the star mark says? Which will come on later. There is something called volatility, for which on which this the time value can differ. So volatility will come in the later part, but right now, for the better understanding, let's understand this intrinsic value and time value. So this is how the premium is segmented. Now, what is intrinsic value? Intrinsic value, there is a formula. For call option, the formula is maximum of 0 comma s minus k. For put option, the formula is maximum of k minus s, where s equals to spot, k equals to strike. Maximum of 0 comma s minus k, maximum of k minus 0. This is the formula for intrinsic value and intrinsic value. Okay, कि what is the minimum price of a call option should be. एक ऑप्शन का मिनिमम क्या भाव होना चाहिए, इंट्रिंसिक वैल्यू का मतलब ये, व्हाट शुड बी द मिनिमम प्राइस. एक ऑप्शन इतना से नीचे नहीं होना चाहिए. अच्छा, उसके नीचे है तो इफ उससे नीचे है, then there is an arbitrage. Otherwise the price has to be this. Minimum price that option should quote is this price. That is called intrinsic value. And what is the time value? Anything above intrinsic. So इसको define कैसे करेंगे? That's the definition. Anything above intrinsic is time value. ठीक है? Anything above intrinsic is time value. Now, first calculate the intrinsic value for some of the call option. Please put your pen and paper along with you, and I'll give you some of the task and do it on pen and paper. जिसको those who are experienced, जिसको जरूरत नहीं है, you can choose to remain silent. But those who want to do, please do it for the fast calculation. C is for call. You are going to give me the intrinsic value. Calculate the intrinsic value for me. थोड़ा fast, easy है. Let me do it.
So ये 25 होगा ना?
0, 25.
और ये तो 0 होगा ये. Last two.
Last one is 0.
So third वाला 0 नहीं होगा. It's a call option.
Call.
हाँ, like this right.
S minus K. Spot minus strike. ठीक है. This is a formula way. ठीक है. Let me try to make it easier way. Call option means you want to buy. Put option means you want to sell. 10,500 में कोई चीज आपको खरीदनी है, ऑलरेडी 11,000 का दाम है, तो 500 रुपए मिनिमम देने पड़ेंगे. मिनिमम कितने देने पड़ेंगे? 500 you have to minimum give. पुट ऑप्शन 50 रुपए में आपको कोई चीज बेचनी है, ऑलरेडी 25 रुपए दाम है, तो मिनिमम उसके लिए 25 रुपए तो देने ही पड़ेंगे. यू वांट टू सेल एट 23,500 में और 24,000 पे ऑलरेडी दाम है, मैं क्यों दूं पैसे? मेरे को तो 500 रुपए नीचे बेचना है, व्हाई शुड आई पे? दैट्स इंट्रिंसिक वैल्यू. Pay if you are getting money only just because entering the transaction. ठीक है, that's intrinsic value. Anything above is time value. ठीक है. You want to practice this? There is a website called elanoptions.com. Go there and you can practice it. This now our objective is कि ये ऑप्शन का प्राइस कब बढ़ता है और कब गिरता है, क्यों बढ़ता है और क्यों गिरता है, एंड इसको कैसे ट्रेड किया जाता है. ये अपना ऑब्जेक्टिव है. Now let's take the example from the markets. This is a 580 call option on Tata Steel, and there is a 560 call option. I'm taking two call options. 560 call option on Tata Steel currently is at I can say 13.70 rupees, 13.7 rupees, and 580 call option on Tata Steel is at 4.2. These are the call option premium prices. Right now Tata Steel is at 567, sorry. This is the Tata Steel cash market price. This is the price of Tata Steel. So in this there is intrinsic value, in this there is no intrinsic value. Yes or no? And what is the time value here? This minus 7 rupees. This is the time value. What is the time value here? This minus 0. The entire thing is time value. Hmm? उसी तरह से यहाँ पे बहुत सारे कॉन्ट्रैक्ट लिस्टेड है जिसकी प्राइसेस ये है. सो 600 का कॉल का कुछ और प्राइसेस है, एंड लेट्स से इफ आई क्लिक ऑन 580, तो इट विल थ्रो मी अ प्राइस ऑफ 580 कॉल इन दी मार्च, अप्रैल एंड मे कॉन्ट्रैक्ट्स. So right now the March contract is 4 rupees and April contract is 19 rupees. The same 580 call in Tata Steel in the April contract is 19 rupees and this one is 4 rupees. So the difference of time, the difference of time, that brings the difference in the premium pricing. All you have to, all we have, the contracts are same, the everything is same. Tata Steel in 1 month is not going to change unless there is a big corporate change. I mean that you and I cannot imagine right now. So, or let's say Nifty. If I'm talking about Nifty, the Nifty cannot change overnight to a different thing. Getting a direction is different thing. But if the prices will be there, the strike price will be there, and it will be there every month. The point is, it will be there every month. Can you trade them successfully every month? So options को आप किस किस तरीके से यूज कर सकते हैं? Directional trade, non-directional trade, so ये तीन चार ये बेसिकली दो तरह के. दिस इज, आई वुडंट से दिस इज अ वे ऑफ इट, बट डायरेक्शनल और नॉन डायरेक्शनल ट्रेड. डायरेक्शनल ट्रेड में जो द इनपुट दैट यू नीड will the major input that you will need is your direction with timing. You have to know the direction along with timing. Just knowing the direction is not enough. And non-directional trades में you have to know the premium deeply, premium pricing deeply, how the premium is going to behave with respect to time and with respect to underlying. So and how can you trade based on that? Since option premium is a function, option premium is dependent on underlying, time, and there's one more concept which is called volatility. Understanding these three becomes very important. Change of one thing in your favor may turn an unprofitable trade into a profitable trade. The trade which could not have been profitable could become a profitable, and the vice versa, because of a favorable change into any of these. In these three things, all three are important. All three are important, very important. At least you know the move. Underlying, by underlying I'm saying direction. And directional move is something that you will get from whatever methods you know, either fundamental or technical. I'm not the guru, I'm not the guy to tell you. Time is, you know, the time it passes every day. Volatility is something that we are going to focus a lot in the coming days, and that's our tool to trade. This time value, when I put the asterisk mark, you understand the intrinsic value. When I put the asterisk mark, this was time and volatility, because the time always goes by. You cannot increase the time. You cannot increase the time. So the time value cannot be increased, but sometimes the option value increase despite the stock being there. Despite the stock being there, how can us how can the uh, premium price increase? The increment in the premium price is due to the reason of volatility. We will get to the situation when premium price increase despite there is no change anywhere else, and what has caused those changes, and we'll understand why the volatility, understanding volatility is important. That's why volatility becomes an important ingredient for option pricing. To further give you an example, um, okay, uh, there are two stocks, 140. Both the stocks are trading at 140. Okay, I'll give you the name later on, but both the stocks are trading at 140. What should be the call option price of 145? Call option price of these. What should be there? Everything is same. Time to expiry is same. The nature of the stocks are different. Time to expiry is same. So everything, I mean, by everything I mean only time to expiry. Only time to expiry is same. So will the option prices be call option price I'm talking? If the call option price of this is, let's say, 1 rupee, will the option price of this be dependent on the other one? इसके अराउंड होगा, एक के आसपास होगा, ऐसा हो सकता है, और एक के आसपास होगा तो कितना होगा, और इज इट एट ऑल डिपेंडेंट? तो व्हाट कैन मेक द डिफरेंस? What is going to make the difference in this? Because time to expiry is same, price is same, 140 is the price, strike price is same,
Maybe liquidity.
liquidity is same, let's say.
Volatility.
The only thing which is going to make a difference is volatility. The price of everything. So let me give you an example. The examples are, let's say, Ashok Leyland and Bank of Baroda. They are around the same prices, or you can take any example. But if the volatility is different, the price will be a lot difference. So where can you see that? Option price.com. This is an option price calculator, wherein, let's say, this is underlying price, this is exercise price, exercise is the strike price, this is days till expiry, this is interest rate, uh, just for the purpose of remaining with the flow, just stay with the flow. This is interest rate, this is dividend yield, this is volatility, this is rounding. Underlying didn't change, underlying वहीं का वहीं है, let's say. Strike price didn't change, days to expiry in a day will not change, दोनों same days to expiry है. Interest rate doesn't change so often, the RBI governor doesn't come so often. Dividend yield, let's keep it 0 for both, or let's keep it same for both. Then what can cause the change in the price of a call option? If I change only the volatility, the price of a call option will change. I guess this is थोड़ा हैवी हो रहा है, अब थोड़ा हैवी हो रहा है। ये volatility I should keep the volatility chapter for later on. 3 hour, more than 3 hour classes brings the dullness in the bring the dullness. So let me keep it here only. आपके पास अभी कॉल ऑप्शन का इंट्रिंसिक वैल्यू एंड पुट ऑप्शन का इंट्रिंसिक वैल्यू कैलकुलेशन यू डिड. This is you are comfortable and you have done the part of intrinsic value and time value. Just a second, give me a minute. There's something called moneyness. I'm speaking about the jargons जो आपको मिलेंगे बोलने के लिए, that you will get to hear. Moneyness of an option, ATM, ITM, and OTM. At the money, in the money, out of the money. एक 100 रुपीज का स्टॉक है. If 100 is the strike, ये स्टॉक है and this is strike. 100 का स्टॉक, 100 is strike. This becomes ATM. The strike which has intrinsic value, will be in the money. Strike which has no intrinsic value, that is zero intrinsic value, will be out of the money. Intrinsic value strike will be in the money and no intrinsic value will be out of the money. NSE में जब भी आप जाओगे तो आप येलो वाला part, the yellow part is in the money, the white part is out of the money for any of the stock or any of the. This is a good thing that NSE has already done, which is very good. Visually बहुत अच्छा लगता है. It's, you know, this part is in the money and this part is in the money and this part is out of the money. Number of expiry in the index option of Nifty is highest. You get expiry till 2022, but that is not the case in stock options. If you choose stock options, the expiry will be only 3 months. For index options, Nifty, Bank Nifty, and stocks. There are 3 categories: Nifty, monthly, half yearly, और annual. की कॉन्ट्रैक्ट्स हैं. यहाँ पे हैं वीकलीज, एंड मंथली, एंड यहाँ पे सिर्फ मंथली ऑप्शंस हैं. So Nifty, Bank Nifty, and stock options. Front month and front week is most liquid. Front month week is most liquid. So that is enough for today's session. और कुछ नहीं. So आज का अपना सेशन जो था, that was introduction to what is there. OI will be done tomorrow. Open interest, you come with a fresh mind. I cannot introduce OI as a chapter in this state of mind. So OI will be done fresh tomorrow. अपना 11 बजे से class, I guess 11 o'clock. Read, go home. If you get energy to read about OIs. I have given you the places where to read from. You have to watch the lectures. You can watch the video also YouTube में. And that is a 3-part video. And tomorrow आप my FNO जो है, जिसके पास है, जिसके पास नहीं है, उसके please take the access, get my FNO into working. And the tomorrow's class will be purely OI and my FNO का कॉम्बिनेशन में क्या क्या कॉम्बिनेशन यूज कर सकते हैं, कैसे कैसे अपने ट्रेड्स डिस्कशन कर सकते हैं, एंड पास्ट ट्रेड्स के डिस्कशन. सो इम्पोर्टेंट विल बी go home and read watch the MyFNO video, walkthrough video, and watch the read the blog of MyFNO. If possible, read and before that OI का पार्ट. ये 3 चीज आपको पढ़ के आनी. If possible, अगर ये 3 चीज करके आ सकते हैं, OI from Zerodha, and there is a video on secrets to open interest. You search in the Google, YouTube, so there is a video, secrets to open interest. So my FNO video, blog, and secrets to open interest. Secrets to open interest video, YouTube. दिस वीडियो में थोड़ा सा एडिटिंग इश्यू था, तो वो हुआ था, बट जो वॉइस और ये इज नॉट मैचिंग. यू कैन रीड द जीरोधा varsity का मॉड्यूल which I've sent in the group. I'll send it again, so you read that. I'll leave the class for यहीं पे stop the class. Come with a fresh mind tomorrow, and then we'll introduce the OI section. Not today. And come with as many questions as you can. Neha ji has a question about the video availability. Neha ji, the video will be available. I mean, you asked the support in the group. She is the best person to tell you. I guess by Wednesday, तो mostly मिल जाएगा. By Wednesday. Thank you, everyone. Thank you. Bye-bye.